Hello, it's Robert Miner with our DT Daily 3-minute update and trade strategies for our Twitter followers and our YouTube followers. As usual, whatever market we talk about here, even if it's not one you trade or the time frame you trade, you'll learn something that you can apply to whatever market or time frame that you do trade. And also, if you like what you hear, check us out at dynamictraders.com, our DT reports, much more comprehensive analysis and specific trade strategies for many more markets. Okay, let's get started. Well, I'm going to take a fairly detailed look at gold today because there's a great lesson to be learned, and that is we can identify the technical position of a market and the probable outcome, but if we receive new technical information when a new bar is added, whether weekly or daily or intraday bar, it may change the whole trend position for that market. So here's gold right up through the end of this past week. This is the weekly data. It's the December contract. That's the active contract now. And over the last couple of weeks, we've anticipated that gold would be sideways to down for a few more weeks because it hadn't reached weekly momentum oversold yet, and that potentially this week ending July 19th was an end of wave 5 high and a weekly high. Well, indeed, for several weeks since we made the weekly momentum bear reversal, we were just sideways to down, mostly sideways, with their weekly momentum bearish. And of course, a momentum reversal is not necessarily a price reversal, but you don't want to trade against a momentum trend. Well, that said, what happened this past week? Well, number one, we had what's called an outside bullish continuation week. It was an outside week with a close near the high and close near the high of the last week. More significantly is the 8 weekly momentum made a bull reversal. And typically there's follow through for at least a week or two, usually 2 to 3 weeks to the upside when we make a bull reversal. Now the 13 look back has been overbought for several weeks during this period of time when the market's gone sideways. So we do give the immediate bias to the shorter look back 8, but because the 13 is overbought, in fact I think it's actually bearish, is that the upside should be very limited. But we should have another week or two net bullish trend. What does that mean? Well, that changes the wave count. For those of you who use Elliott wave like I do, it changes the wave count because of the underlying technical position of the market. And instead of this being a probable 5, it's probably a 3. We just completed a wave 4, and that means we'll probably make a new high in the next week or two. So we're probably 1, 2, 1, 2, 3, 4, 5 for a wave 3. We've got a wave 4, and I'll show you this in the daily data in a minute. And because we're made a bullish reversal on an outside trend continuation week this past week, we're probably on the upside, but the upside is pretty limited. It's probably the final section up, the final week or two up to complete a wave 5. Whereas the typical target for a wave 5, 1481 to 1501. So not too far above Friday's high. Here's the daily data. And again, probable 1, 2, 1, 2, 3, A, B, C, D, E for a 4 and a 5, completed a wave 3. And here's another reason that we had to turn around instead of expecting this to be a wave 5 and a weekly high. This is an almost perfect ABC correction, and we've already traded above the high of this little swing high, got labeled a wave B. That usually indicates that the correction is complete. And if it's a correction, what follows a correction? A resumption of the trend to a new high. So more than likely, again, well, by the way, the daily momentum made a bull reversal on Friday. So more than likely, we're going to be sideways to up for the next week or two and reach around 1481 or a bit higher before this trend is complete. And if we do that, that'll complete a 5-wave advance and a weekly high. It'll be a fairly significant high at least, or it should be. Now, what would void that? The first thing we do whenever we believe we've got a lock on the probable trend direction and minimal time and price targets, well, what can the market do to void that? Well, let me just hit the closing data here. The last little minor swing close, which was just a couple days ago, was at 1432.40. If we close below 1432.40, make a daily close below that, then more than likely this bull trend is not going to continue to 1481. So that's our stop on any long position would be a close below 1432.40 and certainly a trade below Thursday's outside day low. But all the technical now, as of the end of the week, all the technical positions indicate instead of having completed a wave 5 and a weekly high, that we've got one more leg up to go to around 1481. And as long as we don't close below 1432.40, we'll probably reach around that area over the next several days to maybe even a week or two. That's it for today. Apply what you learned here to other markets and other time frames. And check us out at dynamictraders.com and our DT reports. Very inexpensive, ongoing education for many, many markets with daily updates. Take care.